Wait a bit. Whole gang in this bin, man. Woo! All right, first things first. I want to give credits to ICT, Michael Huddleston, the Inner Circle Trader. Whatever you know him by, he is my mentor. All of this information provided today is his intellectual property. Therefore, all credits go to him. Before we start this video, I must let you know about a couple risk disclaimers. I'm not a financial advisor, so this video should not make you feel entitled to investing or give you any wrong idea about risk. Forex is a leveraged product and may not be suitable for you as it carries a high degree of risk to your capital, and you should ensure you understand all the risk before entering a trade. The high degree of leverage can work against you as well as for you. Past performance is not indicative of future results. Bang! So with that being said, let's head into this video. Um, why are we talking about market maker models? If you guys follow my channel, all I do is post market maker models, talk about market maker models, and I post one about every day or every other day um, to help others see the same opportunities or see the same fractal that I see in the market. And my only thing is I hope I add value to those traders who are struggling to find a consistent way of seeing the market. This doesn't mean that you're going to be profitable, but when you understand a certain fractal or you have a fractal attached to your psyche, you start connecting with it more and understanding it more. And therefore, when you start trading, you become more of a robot and you become fearless of losses and you just care about the fractal. And it becomes more about the craft instead of the outcome. So, one thing that I like to do is I like to understand where I am in the range when I am trading market maker models and the overall direction. So I want to identify the range that I am in, and then I also want to identify the drawn liquidity on the higher time frames. So on the higher time frames, I want to know where is price going and why do I want to do that? The thing is that if I understand the drawn liquidity, I have a higher chance of winning. The probability or odds are on my favor if I understand where the higher time frame is going because the smaller time frames will just follow along because that's what they are, smaller time frames. So um, they have to follow the higher time frames. So one thing I like to do is identifying where I am in the range, like I said. Then when I identify it, I like to say, okay, I know this is hindsight, but this is the original consolidation. We ran these stops up here. Price had a shift in market structure and we've been running lower ever since, and this is going to be a retracement, likely to expand lower and clear this sell side liquidity or this original consolidation here. So I kind of frame the higher time frame drawn liquidity by kind of following the same pattern as I do on the smaller time frames. This is your original consolidation, this is your reversal point, and this is a return to the original consolidation, and then eventually we sweep it, right? So the only thing is that I like to trade with this fractal in mind also in the smaller time frames. Because again, this is what makes me understand the market best, and it's the easiest way for me to approach any trading style. So here we have the fair value gap, and one of the biggest things that I've been finding out on when to anticipate market maker models is that anytime we trade into a fair value gap on the daily time frame, the 4-hour time frame, the 1-hour time frame, if you go down to the smaller time frames inside this range, you're likely to see a smaller market maker model occur. So every time I traded into this one, trade when I traded into this one here, there was a market maker sell model on the smaller time frames. When I traded into this fair value gap here, there was a market maker sell model on the smaller time frame, and possibly when it traded into here, there was a smaller market maker buy model um, in this time frame here. But since the overall direction or the overall drawn liquidity is lower on the higher time frames, I want to be focused on the order flow. The market maker sell model is what I'm interested in because shorts are high probability as we are in the premium of a range and price has liquidity lower, resting below the marketplace. So now I'm going to go on the 3-minute time frame. And like I said, The whole point of this video is to teach you how to anticipate market maker models and when they form. Um, because it's easy to just look at a buy stop rate and wait for the market structure shift and then wait for some sort of retracement and then those are things like return to break of structure, all those things. But this is a little different because this gives me an exact price allocation where market maker models should occur. So in this range, we have these price levels here, which is 72,530 and 72,680, roughly around 72,680. So I know that between these ranges, there should or there will be a market maker sell model occurring. So ICT enforces the idea of going on smaller time frames and using them to your advantage for the lowest. Well, the reason why I go on smaller time frames is for tighter entries, so more precision base entries and less risk exposure. Um, Granted, if you guys don't understand how a market maker sell model looks, well, this is not that important to you. But if you do understand how market maker models looks, and I hope you do, because or have an idea, because I post them all the time on my channel, and I provide this information all the time, and I talk about it all the time. So if you've been following me for a while, you should already see it. I shouldn't have to even say it. But these two lines, again, all we did was go from the 4 hour down to the 3 minute. So these two lines haven't changed. This is still that 4 hour fair value gap that you saw previously before on the 4 hour time frame. So again, 72,530, that's the price range. And I said, what, 72,680? There you go. So in this range, I am anticipating a market maker sell model. All right. So look at this here. We have the original consolidation right there. And this right here, once I see this market structure break and I see these levels being respected of this fair value gap on these smaller time frames, this is a 3 minute time frame, we see this price going higher, higher, punching into that premium level of that fair value gap. And then we create short-term lows on the upper range in the process of doing so. And then we create it here. We create a short-term low here. And kind of like ICT's uh, episode 3 on his YouTube of the new 2022 um, mentorship model that or that new style approach, a trading approach that he wants to share with you guys. It's kind of the same idea here. We wait, we look for this level here for this 4 hour, and then what we're waiting for really is just a proper or a real shift in market structure. And we don't want to force it, we want to wait for it. And so I see that, price respects this discount, comes to this order block, respects this, goes higher, uh, and it just punches in on that premium, raise it a little bit. Then we have these short-term lows form. Right here, this causes a shift in market structure. Price then finds its way down here, and then we create a fair value gap in here. And then this would be your ideal entry inside of this breaker also. So you could be entering here and riding this whole leg down into this original consolidation. And so the whole idea is that every time, or let's say that every time you pointed out a 4 hour fair value gap, daily fair value gap, a 1 hour fair value gap, and you hopped on these smaller time frames, wasn't it wouldn't it be um, relieving that you know that this is exactly where they're going to form. So I don't have to be looking to short inside of this and look for a market maker settle model here. I don't have to be gambling in a sense or hoping that price hits my TP or that price is going to attack the sell side liquidity. I don't have to be praying or hoping or gambling. Um, it's more of a systematic approach where, all right, I'm a spot a fair value gap. Once I outline that fair value gap, boom, we have this framework here. And the framework, the visualization framework, would be the market maker sell model. And in this idea here. And then, of course, whatever you use as your entry technique, that would be another thing. But it's just that this gives you a easy way to frame trade setups based on market maker models. So I know that every time I see a 4 hour fair value gap, I'm like, wow, there's going to be a market maker sell model. I mean, in context with this, that we are in premium, and in order to go to discount, we need to short from premium. So this gives me a clear understanding of where the market maker models should form. And then when I see the market structure break here, or the shift of market structure, whatever you want to call it, price goes lower, forms that fair value gap. This is where I would be likely to enter, right? Inside this fair value gap. Then price goes lower and clears this sell side liquidity. So if this is not enough, let's go to another 4 hour fair value gap, and then we can go on the other time frames and we can monitor if this is true. So let's say that this is another 4 hour fair value gap, which it is here. And then what I'm looking for is that same fractal. I'm looking for a original consolidation, a smart money reversal, and a clear of that original consolidation or that sell side liquidity. Let's go into here. This is another one. And all of them are not going to be as pretty and perfect as some of the others will be, but it's just the idea, the concept. It's just a framework here. So even in this one, price doesn't have to. I mean, this could be one of your rules. I obviously would be more comfortable when I am more comfortable when a fair value gap is entirely filled, but that's also another advanced teaching that I cannot provide for you because I am not allowed to, as that would break or violate my NDA with ICT. But there are times where fair value gaps, or through your own experience, you'll know when fair value gaps are likely to be entirely filled, or when fair value gaps only have to reach into it and then displace away from it. Those are other concepts that one must be in ICT's mentorship in order to understand. But that's not my whole point here. Everything I'm trying to show here is on his YouTube. Um, except for the fair value gap concept with anticipating the market maker models form. So this is the original consolidation. And then here we have a short-term low. So we have a 1, 2, 3. We have 3 candles. This becomes a short-term low. Then price comes here, rates that low. Right there, this is a fair value gap. You could be a seller here. Understanding that price trades into the fair value gap, then we break or have a shift in market structure after clearing also these stops here, these equal highs here. We cleared that, and then we have that raid of this short-term low. Then boom, price goes into this fair value gap, and then look, we have the market maker sell model formation. Let me use the replay button if I can use it here. Boom. You want to be focusing here. It could be that this is your original consolidation, or it could even be that this is your original consolidation. Doesn't matter. But the whole premise is that we're inside that fair value gap, and this fair value gap should start the market maker sell model. So you have the original consolidation, smart money reversal. Then we're anticipating the market to tip its hands or show its hands. Comes below this low here. Then now we want to anticipate or stock entries. Here we have a fair value gap, bearish order block, this candle here, and boom, price goes lower. Then this is the level of redistribution. Fair value gap, bearish order block right there. You could be a seller there and still target this. But the whole idea is not to teach market maker models. The whole idea is to teach or to show you guys where they are likely to form. So let's find another fair value gap. We can go back in time. He's like, oh, these are all cherry picked. These are things that you cherry picked in order for this to work. All right, you don't believe me? Let's go into it. So let's identify this fair value gap here. once again, the idea is we have to understand the higher time frame draw on liquidity, and we're obviously in premium in this fractal here also. We're in premium of the range, and um, shorts are high probability, and we want to be targeting sell side liquidity. And sell side liquidity may be in the form of this here, this here, this here, and even this internal range liquidity, which is this fair value gap here. So let's hop down to a smaller time frame, and let's see if we can see if a market maker model forms out of this area. And once again, they're not always going to look pretty. They're not always going to look extremely clear. Um, that's one of the things that you're going to have experience with over time of understanding, because sometimes there's choppiness at the smart money reversal area where price will create another range or a consolidation, and you're just still going to have to understand uh, that this still is a market maker sell model due to the fact that it has only three things in here, which is a original consolidation, a reversal, and a clear of that original consolidation here. But again, we are in a fair value gap, a higher time frame fair value gap, which is the 4 hour we're using here in particular. And so we're pretty much just waiting till price shows its hand. Um, and how does it show its hand? By the shift in market structure. We want, we're, well, it's better if we see price raid buy side liquidity as it's going inside of this fair value gap. So we have this buy side liquidity here. Price raids those equal highs here and even takes away this high, comes into this inefficiency in here or this imbalance, and then we start seeing a downturn on price. So here we have a low, price goes up. We still haven't rated that with this low, so we're still waiting. Price goes up here. As it was trying to go below this, it creates another short-term low. So now this becomes my area or my level that I'm anticipating or I'm stalking. And so once I see this right here, boom, price breaks lower, shift the market structure there. And then this is a bearish order block. You can enter anywhere inside of this range. Fair value gap in here. This could be your entry and your stops above here. And then if you didn't see this very clearly, you could wait for more price action. And let's say that, price breaks the structure here again, here. And then here is a fair value gap you could enter right there. Or even when it trades up more into it, into this right here. And then this could be your entry right there to go short and look for a clear on that original consolidation. And so then on the 4 hour, it showed that price went back up to this range. And it's because, there was buy side liquidity left open here, left here, and the fair value gap was still kind of open and it wasn't fully filled. So price came back to seek that area of liquidity. So can I find a market maker sell model inside of this? Let's go down to a smaller time frame, and I'm positive that we can. So on the 1 minute, as we punch into this fair value gap, we have this buy side liquidity resting above here. Price comes, clears that buy side liquidity at the premium high of that fair value gap, and then let's look a little bit closer. We have a short-term low here that's formed right before rating these equal highs, and then price comes down, and then we have a shift in market structure right there. This right here lets you know that now price has to deliver to the downside, and we're now looking to look for sell side liquidity, or price will offer sell side liquidity. And here it is. We have the original consolidation, right? And we have the smart money reversal after clearing these buy stops here at the premium range of the fair value gap. Then price comes below, takes out that short-term low. Then you find your entry with this fair value gap here. And price then eventually takes out that sell side liquidity here. And it happens so often. We could go to another pair. I'm just using Aussie because it's pretty much my Aussie AU or AUD USD because it's my favorite pair. Um, I find most comfort with it, but we could check this out here. Same thing. We have a 4-hour bullish fair value gap. And let's just erase that price action there because it doesn't matter. And let's see if we could see a market maker buy model form around this area or inside this fair value gap. And once again, there's only three things that are promised inside of this fractal, which are the original consolidation, the smart money reversal, and the return to the original consolidation. So you're not going to see the same exact fractal, but as far as context wise and how do I say this? Approach, it has a lot of similarities. These fractals always have a lot of similarities. It does not matter. So here we have an original consolidation. If that is not your original consolidation, let's say it's this. We have a low resistance liquidity run here. Also, this is original consolidation. Let that be. We take out this short-term low as we're heading inside of this fair value gap, and then price even takes out this high. This low here. Then we take it out. Then go the opposing way, and this is a shift in market structure there. You could then be a buyer here and take it all the way above this original consolidation right there. And a entry like this would have offered you, well, an opportunity like this would have offered you 11 pips uh, for that one. And then we have highs here, left open here, equal highs, perfect. Then that could have been your drawn liquidity there. And then if you keep going higher, there's even more buy side liquidity. So this is the idea, though, that inside of fair value gaps, market maker models occur. So let's go out to a 1 hour. We could even do a 1 hour, right? It's like, oh, it only works on the 4 hour. Okay, sure. So let's go on this 1 hour fair value gap here. Maybe this will make it more clear for you. And well, this 1 hour fair value gap actually will be the same 1 hour or the same fair value gap in here. But let me see if I can find one. Or it doesn't matter. It just matters the context. It's just where are these going to form? Let's see. We have a 1 hour fair value gap in here. Oh, this is another 4 hour. Oh, doesn't matter. Fuck it. So price reads these stops here. Then we start going higher. Then this is likely the area where price is going to draw to. Go down to the smaller time frames, and we see this again occur here. This phenomenon, a market maker buy model. So here is the buy side liquidity here, equalize here, but I'm really going to focus on the low hanging fruit, which is these highs right here. And boom, once I outlined that this would be the drawn liquidity here, and what do we see? We see this fair value gap being traded down into, and what we're waiting for, or we're anticipating, is that shift in market structure, and we create a short-term high here, price breaks it here, then we raid this low, and then eventually we go above this short-term high here, bullish order block, premium range of the fair value gap, start of a market maker buy model, reaccumulation, price goes higher. Excuse me. So it's quite simple. This is not that hard. But if you could just draw out or understand that every time you see a fair value gap on the daily 4 hour, 1 hour, you understand that price is likely to create a market maker buy model or sell model around these areas. And the whole idea is if you're in premium, you want to be looking for shorts. So you're going to look for fair value gaps that will be in the premium range That way you can anticipate market maker sell models. And if you're looking to buy, because price is in discount, you are drawing out fair value gaps in the discount of the range, and you're looking for price to create market maker buy models on the smaller time frames inside that range. And so that's pretty much it. I don't want to go deeper than this, but tell me if you guys understood this video. Give me feedback in the comments below. Um, and if this is something that helped you, I'm glad it helped you. Um, please go check out ICT if you don't understand the market maker sell models. But I'm out, and I hope this was insightful.